The land tax burn, particularly for the old Italian family that owned lots of houses, times have changed, and let's talk about it. Stay tuned.
Good morning, everyone. Welcome to Morning Minutes, episode 422. Land tax is taking a lot of people's rental income. With as much as people love the capital growth they are experiencing, if we're looking at Narrowena, Mark, for example, your entry-level home in the last 4 years has gone from 1 million to 1.8 to 2 million, which is phenomenal. But we haven't necessarily seen that growth in rental income, but your land tax has effectively doubled. What say you, sir?
You know what? It's easy to miss because it sort of happens in the back end. So it's sort of like having a nice car and then not realizing, but after 50 or 100,000 kilometers, the things cost you an absolute fortune to run and service and maintain. So it's one of those things that a professional investor can sort of can be swept away with a little bit, sucked up a little bit, and then they can look back 5 or 10 years and go, oh my God, I've just paid 200 grand in the last 10 years on land tax. What the hell happened there? So for people who don't know what land tax is, we've got to tell you. Do you want to explain it, Burge?
First of all, just anyone watching live on Instagram, we're just trialing it because we haven't been on Instagram live for a while. So the quality, it's basically an iPad flipped at the screen. We're going to trial it for sound as we do want to do it professionally. So forgive us this morning. Put comments in there if the sound is no good. Yes, I understand the alignment's out. So just sort of forgive us there. Okay, land tax. So land tax is a tax that goes to the government on investment properties. The government does give you a threshold of up to $750,000 of the land value, which you do not pay a percentage of. Now, and that's not land value of what you bought the property for say, $2 million. You can Google Valuer General Property, New South Wales, put in your address, and that will give you the government land value, which, for example, if you buy a house for $2 million, it could be $800,000 the land value.
You got to watch this, guys. You got to watch this.
It's very important. So let's say it is $800,000 and it's your investment property. There's a 1.6% tax. Now, of an $800,000 value, $750,000 no tax. But of that extra 50,000, you calculate it 50,000 times 1.6, and that will be your per annum tax.
It's about $200 a week of your rent. It's about $200 a week, $200 or $300 a week of your rent. You will burn in land tax. So I'll give you a working example. Italians are wonderful investors. They have a tremendous reputation for buying and holding, and not being scared of debt. A little bit tenacious and ballsy. So yesterday, I had a 75-year-old client, Italian lady. She absolute weapon. And she has been Mama Weapon. Mama Weapon has been buying big blocks of land for 60 years. And she's been chopping them up and giving stuff to her kids and giving it away. Now, Mama Weapon is like, what the hell? So she's just sold a place in Narrowena, Cromer, $2 million. The problem was the assessment that you were referring to, Michael, on her block of land was 1.4.
Wow. So 1.4 times 0.16 is $22,400 a year. $430 a week, Mark.
Her rent was only $650.
Wow.
So it was a little house on a 650 metre square block. She'd already subdivided it. But she's going like $400 a week of my rent I'm giving to the government. So what's happening, guys and girls? Why is this happening? The government doesn't want people to take away little houses on big blocks from families that need it.
Yep.
So they're taxing the investor or that is just sitting on that block of land forever, and they're saying, we're going to whack you. We're going to whack you every year. And the reason they're whacking you is so mum and dads that are coming out of a unit that want to buy a house and live in a house, it's making it more affordable for them. This is precisely what happened with this lady, and this is precisely why she sold, because of the land tax, because the government's imposed the land tax, and it's, guess who bought it? A young family.
Yeah, which would be their principal residence, wouldn't be paying any land tax. So you can really see the incentive is to, it's almost like the government don't want the money, they want the movement, they want the young families going in there because they're encouraging it going from an asset creating income for the government to an asset creating nothing, but they know it stimulates, it helps with affordability and the movement. But Mark, this is key as well. So she had a property bringing in, say, $32,000 a year in income, 30 grand. 22 was going to land tax, probably 4,000 a council, plus maintenance. So you may be making $50, $100 a week. But what she wasn't selling to cash out of the market, but there's a lot of stuff she can buy now. What would she buy, or what would someone buy to substitute that 30 grand income, and would it cost her more? Or are there investments out there that would be a substantial lower purchase price, lower land tax, if any, and same or greater rental income?
Yeah, interesting model, because, she didn't want to get her money out of the property market, but she wanted her money. We got any comments there? Hey, Emma, how are you? She didn't want to get her money out of the market. She wanted to make her money work better for her. And the driving force, which is really interesting, because it's been these owners of these blocks of land have just taken a herd pill for 3 years now, and just now they're like, that's enough. I can't take the pain of land tax anymore. So she sold the property for $2 million. She's brought the $2 million to me yesterday and said, I want to buy an apartment. I want to buy an apartment. And I said, how much worth? She said, well, I've got $2 million in the house. I'm going to spend $2 million on an apartment. 2 apartments, 3 apartments, 1 apartment, don't care. You're going, yeah, right. So bottom line is the rent's better. Bottom line is the land tax is a quarter.
Because Mark, a brand new 1-bedroom will generate 30 grand a year income, and that'll be, say, 800K. So for the same income, she can have $1.2 million change left over. An apartment land value is generally 100 grand. So she'll be under 750. But let's say she's still got another house.
Yeah.
100
grand. Selling a mama.
Yes.
Huh?
Oh, yeah, I was saying.
Okay.
Yeah. So even at $100,000, the land tax would be $1,600 a year. So $30 a week instead of $430. Same income, still got a property in the market, got $1.2 million cash left over, which would allow her to buy another apartment and have double the income with still 90% less tax, or 3. So it does go against that sort of generation's traditional mindset: own land, say no to stamp duty, say no to strata. But things change. Tax, government structures change. Purchase prices have changed. Income ratios have changed. You have to change with the times and relook at the model.
And she's 75, changing with the times, dude. So, guys, if you've just tuned in, we're talking about the whole fundamental framework of investment is changing on the back of land tax, and you're getting people that have had an investment strategy and a way that they roll. For 60 years, this lady I had in the office yesterday, Italian mama, 60 years she's been investing in Australian real estate, and she's actually changed her model now on the back of land tax. You know, and you know, as Charlie says, what's Charlie saying? Can you read that?
Yeah, a kick in the guts for hardworking families who sacrifice everything to secure their future while the budgets rake in welfare and benefits. And that's exactly right. Where it comes to, if you've bought your family home and you
Charlie's got the balls for saying it. Charlie's got the balls for saying it.
Exactly. So you buy that second home investment, and basically all your income is gone in land tax. So Mark, we'll talk you off air with maybe not a. There's pros and cons, but let's say you put it in a company. We do that a lot with commercial. Obviously, this is not financial advice because there's pros and cons. But what was the conversation we just had off air previously? What some
you still get screwed in the house because it still pushes you over the threshold. But you know, I guess you've got opportunities to minimise land tax, but you're going to be paying capital gains tax. So it's one heel or one or one falls the other, whatever they say. But something bigger than that is. My Italian mama that came into the office yesterday that just sold her house for $2 million, she was real clever. So not only was she wired on the land tax, which we were talking about, what when I explained to her about buying new, she within a set, this lady is like 75. She was like, bang, she had traction straight away, and she goes, You're right. Because what I explained to her is the government took it in order for the government to stimulate and help the economy and help the market. Charlie's got other words for it. But, in order for the government to do that, they have introduced this huge land tax, which has pushed investors out of homes or to have as an investment in the hope that they're opening it up for young families to buy it. This Italian mama that sold, a young family bought her house, so the government did that. That worked wrong or right, what the government wanted. But when I said to her, listen, if you buy a new apartment, do you know you get new building depreciation? She said, I do. How much? And I said, it's going to be about $200 a week in your pocket. She goes, what? So I showed her this two-bedder. The depreciation in year one was $22,000. She's paying 30-40 cents in a dollar tax. Huh?
It's massive. Hey, on the depreciation we had for Havana, for over 10 years, it's $600K. It's astonishing.
That was it. So she said to me, she said, you know what? If I'm not paying the land tax if I'm paying a quarter of the $22,000 land tax bill for the same amount of property, and I'm getting this new building depreciation, she said, that's very good. Over 5 years, over 10 years, that's a lot of money. She was like, instead of dumping $200,000 on land tax in 10 years, she was not dumping that any further and making another $200 on new building depreciation. She was up. There was $400,000 to her cash flow over a 10-year period. Now, guys and girls, I know that my point of view is you've got to understand there's a movement from the government. Why are they offering this for new properties only? They're not doing it it's a fraction on second-hand property, new building depreciation. Can you see what's happening? Can you see the pattern?
Yeah, look at this, Mark.
That's what a depreciation schedule looks like, guys.
Look how swift this work is. So 1 bedroom, let's go to the 2 bedroom. Where that's 1+ study, 2 bedroom. Plan group, 20,000.
Why are you bringing up, Burge? But people have got to understand that the government is, if you are an investor, the government is saying, hey, puppy dog, buy new, and we will give you huge depreciation. So what are they doing? They are stimulating building in the economy. That's what they're stimulating. So there's method to this madness. Is it madness? Is it clever? I don't know. There it is. What's that?
561,000 for 10 years of depreciation of a two-bedder.
Paying 40 cents and a dollar on tax in that 10 years, you're going to get 46% back, 40% back, whatever it is. That's a show.
That's a show. That's a wrap, everyone. Hopefully it wasn't too bad on Insta. We will get it sorted. And thank you, everyone, for your comments. Frida said 75 is the new 60. How good's that? And we'll be back tomorrow.
That's my mother-in-law. All right, guys. Take care. See you, bye.